Good morning, good afternoon, good evening. Welcome back for another video. In today's video, I want to talk about Bitcoin, obviously, but Bitcoin in relation to Silicon Valley Bank, to the Federal Reserve, and to a CPI report, new CPI report that's be coming out tomorrow, March 14th. And so what a curveball that's going to be, because I have been paying a lot of attention to inflation, as you know, if you've been watching my channel, and you know that I've been very discouraged by how slowly inflation is coming down. But we're in an interesting point with this Silicon Valley news. And so if you're not following me on Twitter, head on over to Twitter and hit that follow button. But here's what I've been processing over the last 24, 48 hours as I've been just digesting all of this Silicon Valley Bank news and what the significance of that is. You know, is this Lehman 2.0? I've heard people say that. And to an extent, yes, but there are some major differences because I was old enough for Lehman, and I remember this fear, this terror of like, wait, what's going to happen? You know, and thinking, assuming that the global economy was going to collapse, because the idea of a bailout was just completely foreign to me at the time. But this time around, we have a lot more confidence that we see something like SVB and a lot of smaller banks start to crumble, that there's going to be, you know, here comes the government ready to save the day, you know? And so you can hear my sarcasm in that. That's what they're going to do. And we have a lot more confidence in that now. So, hey, we're safe. But here's the thing I've been thinking about. I've been saying this for a year. Fed is going to raise rates until something breaks. I've been saying that for a year, over a year. Something broke last week. The market, what broke? Well, the Fed has been raising rates aggressively. And whenever they raise rates historically, I've talked about this so many times, something pretty terrible happens, and then they lower rates right back down to zero. We have the dot-com collapse. We have the financial crisis. We have what would have been some kind of a recession in 2020 if it wasn't for COVID, which just caused the Fed to bring rates all the way back down to zero and inject all that funny money, which has created the mess we're in right now. But anyway, something has broken. And what is that thing that broke? Well, Silicon Valley Bank, whether that's a canary in a coal mine or whether it's the 20th biggest bank in the country, that is what has broken. When I have talked about the Fed is going to raise rates until something breaks, I have in my mind thought something much bigger than the 20th biggest bank in the country. But something has broken. And so now I'm wondering it was SVB a big enough break? For the short term, yes. Long term, I doubt it. And here's the fascinating position we're in right now. Tomorrow, there is a CPI report. And what I have been observing, what many of us have been observing, is inflation is not coming down fast enough. And so up until this past week, my impression was, well, the Fed is not going to take their foot off the gas. They're going to continue to raise rates. And we've seen that priced in on the CME FedWatch tool, which I'll take a look at in a second. We've seen it priced in to the markets that the Fed is going to continue to raise rates for the rest of the year. But right now, today, you're seeing Bitcoin back above $24,000. On Friday, it was under $20,000. And what the market is doing is it is pricing in a significant shift in Fed policy. But they are stuck. What are they going to do? Inflation is not down nearly as much as they had hoped it would be by now. But we're seeing signs of a crumbling happening. And man, it's tough. It's tough to try to navigate this. I mean, one thing, the market tends to be pretty accurate when it's just the conglomeration of information. I mean, we're seeing the DXY in a descent after, couple week climb there. It is falling pretty hard. The TNX, the 10-year yield, is it just erased, I think, 5 weeks of gain. I don't know why that's not loading right now. I think I right-clicked. 5 weeks of gains right there. It's gone. And so we're in an interesting position. And CME FedWatch tool. I'm going to look at Bitcoin here in a second. I just want to cover all my bases here. I have not seen this. CME FedWatch tool for the next Fed meeting, 26.9% chance that the Fed is not going to raise rates. This wasn't even on our radar. There was a 0% chance that the Fed was not going to raise rates at the next Fed meeting, which is in 9 days, I think. A 0% chance before last week. Now it's 26.9% chance. And who knows, maybe things will progress to a point where it's almost a 100% chance that they're not going to raise rates. This wasn't even a consideration of ours a week ago. And so, yeah, we see this potentially catastrophic thing with Silicon Valley Bank, but we kind of know the name of the game right now, right? It's like, all right, well, if that's going to happen, then we know that the Fed is going to intervene, and the federal government's going to intervene, regulators are going to intervene and turn on the spigots again. So is that going to happen yet? I don't think so. But a pause, the fact that a pause could potentially be on the horizon, this is happening much sooner than I would have thought. And looking at the price of Bitcoin, it's one of these things we've been talking about these levels for so long now. Just a reminder, I drew these levels on January or early January, the first week of January. I drew these levels, and look how we've been interplaying with them. 25.2, I said that was going to be a key point of resistance, and that if we broke through 25.2, we were going to be off to the races. 24.4, we struggled. We had a wick right through that range, but we could not hold it. And look, this level right here, that was where we held, along with the 20-week SMA, the bottom of the bull market support band. That's why I draw these levels, because this is where traders are looking. And so the thing that I'm wondering right now is all of this a catalyst for us to finally break through this $25,000 level, break through the 200-week simple moving average, which has typically marked a bear market bottom, but right now it's going to be heavy resistance that is at that same 25.2 level right now. And if we break through, we will propel. It's going to be an aggressive move. And that's my target. That's where I would start shorting. Now, it's not going to be easy to break through. I highly doubt that it's going to happen on Monday. I think most people are going to wait for that CPI report on Tuesday. And if that CPI report is higher inflation than analyst estimates, I think that short term we're going to cool off a bit. But what we're going to do then is we're just going to wait. We're going to wait for the Fed. And if the Fed pauses, in my opinion, boom, we break through finally that key level of resistance, 25.2. If they raise rates by 25 basis points, we could still break through it. It's just, I think that potentially this is going to be a clean, decisive move through 25.2 if that happens. And so short term, next few days, we are gearing ourselves up for a breakthrough there. If the Fed, there is certainly a response to the Federal Reserve to whatever they do that could send Bitcoin much lower, back down to these levels for sure. And we again don't break through 25.2. I want to tell you that is very much on my radar. But again, I'm just wondering if this Silicon Valley Bank thing is the catalyst that we need to break through that key resistance. We'll see. There's lots of questions that need to be answered today. The thing that I will say is that this pump today did not surprise me, given the fact that, I'm seeing comments, what, all these banks are failing. What are you talking about? Why would Bitcoin pump? Well, if you've been around long enough, you tend to know you've got to be thinking not only about macro things like that, but about what is going to happen as a result of those macro things. And we've been here long enough to know that certain leaders, government leaders or non-government, because the Fed is not, it's kind of a private institution, drives me crazy, but that they're not going to let this collapse. And, one day they're going to run out of bullets, but, they're not, it makes me gag saying this, they're not out of bullets yet. And so this is what I'm looking for. Pay attention, not financial advice. Pay attention to levels. Look at these levels. Look at how we've interacted with them. And that's going to tell us the story. So that is all I have today. I am very curious to hear your thoughts in the comment section of this video. Got a great comment on Twitter by Justin Herberger here. Tons of regional bank stocks down 60 to 70% at open today. This is way worse than one bank. He's right. Essentially, every local bank probably has the same duration mismatch exposure. Powell's hand has been forced IMO. He thinks, if I'm understanding him correctly, that we're done raising rates. That this pressure is greater than the pressure of decreasing inflation. He might be right about that. We'll see. But let me know your thoughts in the comment section of this video. And if you like this content, smash up that like button, subscribe to the channel, all of that. Otherwise, I will see you in another video. Peace.